So in this video, we're gonna be talking about what does it mean for these companies they're being bailed out by the government. So the airlines, they have reached a deal with the US Treasury. What does that mean? So we'll see now. So the resource will be used for one purpose, for the airline's employees to pay them. So it's not free money. 30% will be used for interest loan. US Treasury is gonna get stock warrants. Whoa. What does that mean? Airlines will have to follow certain rules, so they can't lay off employees. This at least until September 2020. They not gonna be able to do stock buybacks. That's interesting, because that was one of the ways a lot of these stocks would be going up like in the past. So this is at least for 1 year. The compensation for executives are capped to a certain amount. This is for airlines. Bong is still deciding whether or not it will accept the government bailout. So still deciding the rules and if they're going to be doing or not. The question is, will the stock price for airlines and all of these companies, will they ever come back to previous levels? Previous high levels? Let's look at airlines. Are they going to be at 2x, 3x? And the question is also, when? Is it worth to wait? Let's say for Delta Airlines, the stock is sitting around $24. In the past, it went, almost 3 times what the price it is right now. And the question is it worth the risk? It is worth to wait. God knows how long it's gonna take for these companies to go up to previous levels. So what's involved in these bailouts? What are the consequences of the bailout? Airlines already have debt, of course, ones more than others, but this is just gonna go higher. So it's not all free money, right? So for airlines, 30% of the loan is gonna be paid with interest. Yeah, it's a low interest, but it's still a loan that is gonna put on top of the existing loans. There's potential for stock dilution, and actually it's gonna happen for airlines because government is gonna get warrants. They're not gonna be doing stock buybacks for some time. So it's probably 1 year. And that's one of the reasons that many stocks went up in like this long 11-year bull market. So they may reduce or even cut totally the dividends. That can be a problem. So what we learned from previous bailouts? We can look at GM stocks. We can research for that in 2008, 2009. Shareholders lost their investment. But of course you have to look at case by case. It depends on the rules of the bailouts. So Ford, for example, in 2008, 2009 was not that bad. Shareholders were able to keep their investments. And similar for banks, but it all depends. Some companies, they will file for bankruptcy, which it might be a problem. And usually it is a problem. Other companies, even if you keep your investment, you may be penalized because there might be stock dilution. Dividends might be cut totally or partially. It may take a long time until the stock price returns to previous levels, if it does. So based on this, for airlines and the travel industry, should I buy? And what's your strategy going forward? I'm a long-term investor, but I also do swing trading. But for long-term, we need to think about what is going to happen with the economy, not only US, but the world. Like in the next few years, high debt of US. It also may take a long time for economy to recover 100%. That's what we're going to be talking about right now. 2020, we're going to have the election in US. So I'm expecting a lot of volatility. So what's going to happen after the election? Who is going to be the president of the United States? Like, even if it is Trump, but what's going to be their policies in terms of debt, taxes? So that's what we're going to be talking about. We may see the stock market stagnating, which means not going up too much as we have seen in this 11-year bull market. Let's take a look at that. Is the stock market overvalued? A lot of people are talking about this, so that's very important too. Why would I invest in companies that might be very overvalued at this point? Very important to look at the Fed balance sheet and the prospect for the next few years. See how the balance sheet of the United States is going up like a lot. It's going vertically 2020. Of course, we may see, we may think, yeah, they need to do something during this crisis. A lot of people facing really hard time, and I understand. I feel really sorry for everybody that is facing situations that is losing their jobs. Also people who are facing health problems and is being hit by the coronavirus. But the fact is the economy is taking a big hit. And we're going to be talking a little bit about that. Look at the S&P 500 between 1990 and 2020. We have seen some huge bull markets, but also we have seen some long periods of stagnations. Let's take a look at this. Let's see, around 1994 up to the year 2000, we see a very big growth, very steep growth, from 550 to 1500. So that means 3.3 times. That's huge. But what happens after that? A big decline. And the thing is not about only the big decline, but it's how long the stock market got stagnated during that time. I'm going to be looking at that. Look at this point here, 2007, 2008. Look at that, it basically just came back to the previous level that we see in 2000. The question becomes, what would happen if you had invested during this big decline here? Depending on the time that you're doing, you may have been stuck with your investment without any increases for, years, many years. And that's what we're going to be looking at right now. And then we have the bull market, the 11-year bull market since 2009 up to 2020. S&P 500 was able to grow about 4.3 times. See, 4.3 times. That's huge. And that was based a lot on stock buybacks, high leverage debt. Company using debt to buy stocks. So that's what caused a lot of this bull market. Of course, not everything, of course. The question is to understand what is the fair value of these stocks right now, especially going forward, that we may see a totally different scenario happening. Let's continue. And you may think, who cares? Let me just do dollar cost averaging. But is that really right? Imagine if you buy around this time here. If you buy around this time, what we see is that you probably got stuck for about 6 years. And you may say, I'm doing dollar cost averaging. Yeah, you may keep doing that every month or so. That might be a good strategy. If you're doing dollar cost averaging, don't spend all your money in one shot, because especially how the markets are right now, you may get stuck for a long time. In this all the time here, you'll be stuck about 5 years. So if you're doing dollar cost averaging, yeah, maybe every month or so you buy stocks every week or whatever. Make sure you don't spend all your money in one shot. I think right now it's pretty risky. And we're going to talk about that. So that's why we ask the question, is it worth studying the current economic situation? I think it is worth. See where we are right now. Dollar cost averaging is enough? It might be, depends on how you do it. This is not necessarily trying to find the bottom, but it's really trying to find if stocks are overvalued or not, if it is a good time to invest or not. So one good way of looking at where the stock market is supposed to be is looking at price and earnings. The S&P 500 is currently at a PE ratio of 17.3, which is above its 5-year average of 16.7, and even above the 10-year average of 15. So different methods of calculations all seem to point to the fact the S&P 500 is very expensive right now, or at least expensive. I really recommend this video. It's now a good time to invest in stocks. That's a channel called Craft. You can search on YouTube. It talks about this in much more details. I find very useful. Another article on MarketWatch is this method of valuation called discounted cash flow model. It's calculating that the S&P 500 fair value is at 1800. 1800 should be around 1800. What does that mean? 1800 means the S&P 500 should be back to the 2014 levels. You see here? Now we're around 2800 or so. A lot of people, including myself, I think there is a really wall for these stocks to go to 3000. We never know. The government is just pumping money into the economy. We don't know. So what's my strategy based on all of this? So what's my strategy? So I'm staying in cash or in liquid assets mostly. Something that can be sold quickly, hopefully with profit. So, if something bad really comes, I'm in cash. I'm doing some swing trades in gold. I wait the opportunities to come. I don't chase them. I think this is very important. I think you need to wait them to come to you. Wait them come to a certain level that you feel that you're really not going to lose your money. Volatility means gold may go up and down. I think this is not bad in this sense. But the trend is up for gold. Bull market, I would say, for the next few years, probably. Oil and energy. I'm really looking at oil. I know it's really risky, short term. It's been beaten down twice, but that's the good thing. It's been beaten down twice. The chances of going up, it cannot stay in these levels. It cannot. Travel and airline stocks. It might be a good swing trade, maybe. I personally stay away. The stock market doesn't make any sense right now. So only now I would ask, well, lots of manipulation. So I'm staying away mostly. I really try to avoid trading something that I don't understand. So this week I sold my gold positions, small positions that I had bought, not a long time ago, a few days ago. So I got some profits and without a lot of risk involved. So small profits at this time is very, very welcome to me. And I'm probably going to be trading these stocks if they come back to my comfortable level, which is Galane Gold and Granada Gold Mine. They always come back home at some point, but we never know. If it is a bull market, if the gold stocks decide to just fly, they will fly, and I may lose. I may lose the momentum, but I better lose the momentum than lose money. I think one of the companies, as soon as I sold, the next day or so, it went down. So I'm actually finding good. This volatility is actually pretty good. If you know some companies that where's the bottom, then you just wait until it comes back home, I would say that way, and then you invest. Hopefully you liked the video. Give your like, subscribe to the channel, and have a good day. Thank you.